Let's keep things moving, literally and metaphorically, as we move on to our next session. Payments are changing fast. Expectations are even faster. And let's be honest, everyone wants speed and safety without compromising either. Leading this session is someone who knows the payment space like the back of her hand. She's the group CEO of Payabl and a sharp voice in this industry. Please welcome our moderator, Ugne Buraciene.
Hello. First of all, thank you for being here today. We do have a lot to discuss, and I think it's very interesting always to talk about payments because, as they say, the money makes the world go around, and it's absolutely true for any business as well. And the things that we talk about are important: what is live, what is not, what is working, what are the expectations of the clients around. And by starting of the means of introduction, I would also ask the great panelists here to introduce themselves first. So we set a little bit the scene of what you can expect and their expertise in the industry too. Please, Michael, first.
Thank you, Kia. Great to be here together with all of you. My name is Michael Ioannides, and I'm the country manager of Visa in Cyprus. Sharing some insights about Visa, which I believe it's not necessary, but still I would say that Visa is the network
always necessary about Visa.
is the network of networks powering up payments, security, infrastructures, money movements, and well beyond. A lot to be discussed here in the next few minutes. Thank you.
I'm Matthijs Boon. I'm the group CRO revenue officer for EqualsMoney. Up to a few weeks ago, I was the chief operating officer, and I was I have built out the entire ecosystem for our customers to be able to collect their money globally, deliver it locally, and manage it over a single platform. And hopefully I'll be able to add some insights in relation to balancing how to manage banking relationships, regulators, and internal compliance requirements with delivering the speed that this industry is looking for.
My name is Ran Yehud. I'm from Nuvei. I'm SVP MIA. I've been with Nuvei and its previous form for the past 14 years. We come with strong proposition as well as with a good consultancy approach towards any of the relevant clients or partners that are coming by us. Thank you very much.
Hi everyone, it's great to be here with you. My name is Rafaela. I'm part of the commercial team in Pay Retailers. We specialize in local payments across Latin America. So today here I'm going to be focusing mainly on how the payment landscape in LATAM is emerging, what innovations we've got there, and how we are shaping the industry.
Perfect. Very good. So there's some regulars also here on the panel, so very happy to see you guys back again. And so let's basically maybe start from how do you define fast and flexible payments today for you and for your clients, and what are the expectations? Anyone can give it a chance to answer? Feel free.
Yeah, I can start. Well, I think it's all about flexibility. Because if you are a merchant and you are based, I don't know, even in Cyprus, okay, but you have audience from all around the world, whether it's from LATAM, whether it's from Middle East, Africa, US, you need to have a capability that will allow you to facilitate everything. And I think it's all about that, to have approach the relevant partners that with the global reach to make sure that you are actually addressing it, to bring to localization, to bring into a situation that if you need something, there is, let's say, a relevant provider that will be able to provide it to you, even if it means that there will be some kind of a development. So flexibility, in my perspective, it's about finding the right solution that is needed for you, both on the, let's say, the country regions that you are looking at, but also in terms of the product that you are looking at.
Yeah, and also when we speak about fast and speed of execution in the payments, I think it's also important to know that businesses nowadays, they look quick ways to get to the markets, to do the integration. So having speed and flexibility around the different type of integration methods, whether it's going to be a paywall, hosted pages, direct integration. Nowadays, a new thing is the no-code integration when merchants, they basically don't need to write a single line of code because the payment providers are giving them a pre-built component so they can just copy-paste. Having this ability and this speed to enter the market, it's also important for the businesses.
There are a lot of different dimensions to speed. It's the speed at which you can recognize a transaction inbound. Card payments are quick and instant, but you see a lot of, let's say, transactional activity on direct wire payments in from an underlying retail customer base, and you want to deliver that service. So historically, a lot of that flow went over the rails of SWIFT, and we all know that SWIFT can take some time for it to ultimately land. It's complex, and I think we'll talk about that a little bit later. But being able to localize, being able to build out those localized payment rails, but under control of a single provider that is able to offer the global reach on that level, will accelerate it and will make the service better. It will reduce your operating cost base, not having to engage with multiple EMIs, APIs, banks in the different regions that you are supporting. And I think that's a key element in relation to driving speed. And then ultimately that's the flexibility element of working with providers that are willing to listen and understand what your requirements are to ultimately build it into the product that they have.
So speed is actually real time. So what we're looking for and what we're sort of expecting is that the transactions really become real time, right? So cards is a good example. And maybe Michael, you can add a little bit to it, as you are guys the ones that run one of those infrastructures.
I will start with a different visibility in terms of what we have seen from a consumer study, which says that 69% of consumers are eager to change their financial institution or the financial provider if they don't have real-time fast payments reaching at the destination. By noting that as a start, I would say that for Visa to be fast and flexible, I would be addressing three particular characteristics. First one is, as you said, Ugne, real-time. Delivering funds real-time, multi-currency to the destination of the user without any deductions, without any unnecessary obstacles is crucial. Secondly, is definitely security, because nowadays security is a very important element in each and every transaction. And I would say the third element, which is very, very important, is transparency. With what we have used to experience with SWIFT and the correspondent banking, transparency is not there, not even the other two elements.
There's many things that are not there. If we go to that
we will
direction.
discuss that much more in sequence. And of course, I will be able to provide some more details about our Visa Direct real-time ratings.
Sure.
That's a separate.
So when we say real time, and obviously this is the desire and basically the goal for the whole industry, and from the consumer expectation to basically providers that basically service both clients and consumers in this case. But what does actually work in real time at the moment? So what do we see in practice that is live, functioning, and in what countries? And maybe you can guys give us some examples of those that are actually working in practice.
I think what you see today is the local payment schemes, such as faster payments in the UK, SEPA across Europe. They are near instant. I mean, we're talking about milliseconds. Clearly, you've got the compliance element, monitoring in the background, but I think the flow from between European accounts or within the UK, the intervention from a compliance scheme is absolutely minimal. So you're nearly there. We see similar schemes building up across the globe. That are accessible via either directly or via Visa or competitors of, which ultimately will unlock that. The main issue remains on cross-border because there is no instant scheme available that will allow you to deliver currency anywhere in the world or receive it. And that's where you see innovation at this point in time in relation to stablecoin and other activities, which clearly are instrumental to ultimately rise it up to the level where the customers have the full benefit of instant payments.
So we're saying that it exists, but it's still very fragmented and it doesn't actually keep the global feel of transacting in ease in everywhere that we intend to.
We try to mimic it, and you have entities in Europe and UK, US, Singapore. You can use treasury movements between the countries to mimic the fact of instant payments, but still it's not a global solution. It's then linked to a single provider, and not something that is accessible for the entire market. And that's the drive that needs to happen now. And there are developments on that level. Okay, any economy ultimately wants to have this instant payment between the countries itself, but it will be a long-winded, long process to ultimately get there.
Yeah, real time is the future, and we see that there are some. Well, obviously the scheme were the first to go within real time. Okay, and our scheme has adopted it, but we see generally everywhere in LATAM, in Asia, obviously in the US, but I'm not sure it's relevant for all the clients over here, that there is more and more that are real-time or near to real-time, and they're working very hard in order to do that, both in and out, because for the user, for the common user, that's very important. He deposited, he wants to see it immediately, he wants to get the money refunded or to get the payout, he wants to see that it's happening immediately, and that's something that I know that different companies are investing a lot of time. There are, I would call it the parallel market of, let's say, pay with crypto and everything that are already there. And whoever will not be there will be behind.
Anything to add, Michael?
Oh yes, we have the real-time vehicle. The real-time vehicle for us is Visa Direct, and this is offered directly to all of our members. Practically, Visa Direct has a global reachability. It works with, I would say, more than 11 billion endpoints, which covers accounts, cards, and wallets. So practically it's real time with all those destination verticals. At the same time, it covers more than 195 countries and is provided to more than 160 currencies. So it's there, it's global, and it's real time. So the solution is already out there, and it has the qualities that I have referred previously: real-time mobility, security, and transparency.
Very good. So what we said that we want speed, we want flexibility, and how do we balance that with compliance and regulatory needs and restraints in different regions? Any experience from your side and the challenges that you have as infrastructure providers, as providers in general, and also what you see as potential obstacles for your clients to operate?
Compliance is hard, or regulatory compliance is even harder at the moment. If you look at the UK and Europe, the new legislation that is being put in place over the last 18 months is Europe DORA, Digital Operational Resilience. In the UK, you have consumer duty, APP fraud regulation recently, complete overhaul in relation to the way we are dealing with our underlying customer base. And that's something that you constantly have to adapt to. You have to review your underlying customer base and the service that we provide to make sure that they're fully compliant. And that's a continuous process. Our compliance teams in our business is the largest area of our business. We're about 85 at the moment out of 400, of which 12 are sitting in just regulatory compliance to make sure that we continuously are ahead of the curve to be able to deliver the requested changes. And that does impact the ability to deliver the solutions to our underlying customers. You will have to build in friction in relation to onboarding of the underlying customer base that we have. The controls around what we are looking for to onboard a customer are increasing every single day to ensure that we are protected against breaches that we don't want to incur, not just with the regulators, but also with our banks. From a transaction monitoring perspective, there's a continuous investment in technology to effectively manage the speed of transactional activity, where before you could intervene on a SWIFT quite easily. And now, as it is instant, all these checks need to be done within milliseconds, and it can't be done by people anymore. You need to be able to be deploying AI, machine learning technology, training those models to process these transactions through effectively. So yeah, there's a constant friction between the two.
There's kind of when you look at it, it's very difficult and very hard, but on the other side, it does keep everything stable, right? So the reason why the regulation exists and compliance, exists is that maybe we don't always feel it that way, and we don't really, appreciate, the obstacle that, it creates. But ultimately, in my perspective, it creates a safe environment for everyone to operate and to provide services to end consumers as well in an appropriate manner. So that balance, but how to get that balance, right? So how to get to the point where it's still enabling you to do all of the things, right? That's the main challenge.
Yeah, I think it's all about the balance, to find the balance, and I think organization, and I'm not speaking only about payment providers and alike, also merchants themselves. I think one of the things that they need to invest first is compliance, is everything which is surrounding underwriting and those departments, because if your organization wants to last, it needs to comply. And at the same time, he needs to find the right corridors that will allow him to coexist, okay? And that involves, in my opinion, a lot of work and a lot of understanding. And there is a way to do things, but you need to know your stuff. And that's a piece of advice for everybody, to invest in this type of department. But yes, we need to find the balance, and that's something, and it's a hard work, and it's going, and I don't know, those of you who try to open things in Australia, over there, it's very complicated. It became even more, because everybody tried to be more regulated than the others, and my presume is that this industry will become more and more regulated, and you need to get ahead of that.
And adding to that, I would say that we are looking to more regulation ahead. So agree with Ran. Definitely compliance is something that is always providing a challenge to everyone. But I agree also with Ugne that it's very, very important to be there to have the peace of mind that everything is in good order, and not just in good order, but everything is compliant, and legislation is always upheld. From our end, talking about money movements, allow me just to note that we know how critical compliance is in all those money movement transactions. And to that respect, for the money movement activity with Visa Direct, we actually track each and every transaction on the fly. We credit score that. We pass it through AML. We check also the international databases that have the restrictions about persons and companies. So everything is happening on the fly in milliseconds. So we ensure that everything is delivered on the other end on a fully compliant and AML compliant manner. So the transactions that practically do not comply with the checks or the velocity checks are practically declined before even going on the air.
Yeah, and then you have another layer as well, because you're obviously working with a lot of other financial institutions, which adds the security layer on top of that. So ultimately, if you look at how many participants in the transaction in the chain, that also, by the way, adds to complexity of some of those things as well.
Correct.
Right? So it has to be very smooth and very transparent in a way between all of the parties. Absolutely. So that we know that we can, for what reason the transactions are being declined and why they're going through.
And I think here,
Go ahead.
when we talk about this balance, because we all agree that there is friction between commercial and compliance teams, always pushing for different things. Communication is of crucial importance. Internal communication, also communication with all external partners. We've got clients, just to get as aligned as possible on why certain things are happening, why certain things are important, or why they can't be achieved.
Very good. I'm just cautious a little bit of the time, because we have really, really many questions, and I'm thinking which one would be very suitable now. But I think maybe stablecoins is a good one to put in now, because we talked a little bit about compliance and a little bit of restrictions in that sense, and I think it kind of flows really well into that it is gaining traction, but there are certain issues or things that are still not been resolved with stablecoins. Well, how do you see that in the B2B and B2C space? How the stablecoins are developing, and what do you see from your perspective as experts?
From an Equals perspective, we service a large global client base in different sectors. CFD clearly is a core one where we have been focusing over the last 4 years, but we operate across maritime, we've got some gaming and gambling, but also the vanilla SMEs in Europe and in the UK that we support on a daily basis in relation to the transactional activities. What we're seeing on our platform is a gradual increase on the fiat settlement of stablecoins. We don't offer stablecoins as of yet directly ourselves. It's something that we are actively investigating and looking into.
You're not the only one, for sure.
I think everybody is there at the moment, but we see the demand. We see a gradual increase in relation to the percentage of total flow that originate from there. Which kind of brings me to the challenge. What is the challenge? It's our banks at the moment. Banks just don't understand it yet, or they are not ready for the risk to support this fully on a transactional activity basis. So there's a lot of education happening from our perspective to the top tier banks that we work with, explaining the use cases, the risk levels, how it's the monitoring happening, because we have to go down that supply chain. And that will take some time. I think the great thing in Europe is MiCA is coming up at the moment, which actually is changing the mindset of banks. They're starting to understand that it's being brought into the same level of let's say, data and control as a NT103 or a normal payment message, giving more transparency. But they will take up, banks are slow. I mean, it will take another year, 18 months before the first ones will start to unlock capacity to fully support it globally.
Yeah, like I said before, it evolves all the time and it takes time, but it becomes more and more regulated. And even stablecoin that we seen, like if we 2-3 years ago, we seen it only in emerging market, okay? Only where, I don't know, the scheme were not good enough, or it was not penetrated enough, or the market was not stable enough. Then it came as a replacement or as another compulsory solution. Now we see more and more. It still doesn't going to replace or doesn't going to change everything, but I think it will coexist with the scheme. And for that to work properly, I think, yes, there will be regulation that will come in, and MiCA is the first one to come. There are more that are coming in. And I think that an organization needs to put in mind that he has this as a funnel, and you need to invest and to better understand and to have the appropriate people that will allow you to grow in that field. And yes, it's from my perspective, it's just as any other payment solution. It's another option.
It is. I agree with that. It's another vertical that should not be ignored at all. To the contrary, it's growing. From our end, we've been supporting the stablecoins ecosystem for more than half a decade now. We have even created a sort of a pilot staging with USDC for more than 5 years now. So we are very great supporters. At the same time, we have recently announced another initiative that the intention will be to enhance even more the stable coins collaboration, bringing it more closely to the consumer world and to the and to all the payment providers. So the intention is there. The progress is being.
Do you see like a huge traction from Visa's side in terms of interest from all parties to participate and also to utilize?
That's a very good question.
You're a massive network, so you must have a feel of growth in that area.
We are seeing quite a lot of appetite, and at the same time, traction as well. So that's why we consider that it's an obligation for Visa to support that vertical too. And that's why we've said that we will be enhancing our involvement in the stable coins area to provide more and more initiatives coming up. Already we have announced a few very, very important global initiatives, avoiding names at this stage, but it's there, and it's something that will be addressing the needs of the global transaction field in the stable coins area really soon.
Very good. And it's interesting that we actually covered the next question, which the next question was kind of what are the obstacles to and for the adoption of stable coins, right? So we already kind of gave the hint of where we need to be and what is happening across in the markets in order for it to be more accepted and easier, right? So, and here I think is an interesting paradox because we're talking about speed and then compliance and regulatory frameworks helping for that to be adopted. So hopefully that will be a little bit faster than what the usual space is, but really looking forward to see how that evolves. And going a little bit more to maybe practical part of the panel discussion, And I think this is right up the alley of all of you, and especially guys like us who provide a lot of the solutions for our clients in terms of global acceptance. But it's very difficult to navigate for those merchants how to operate in those markets, and whether to go with someone that has all-in-one, which we all kind of know that is not completely fully possible, or to go locally. So when choosing the providers, when choosing how to operate, what is your opinion, and what your advice is to your clients and to people listening here as well today, if you want to have a payment infrastructure which is global? Do you have a combination of both? Do you choose a provider? Is it the gold standard? Or do you choose someone like Nubuy or Payable who have most of the things under the bonnet? Or you go locally, and for what things do you go locally then for?
It depends a lot on the business itself, their strategy, the way they want to execute. If it's a global brand that is launching worldwide, then obviously it's better to go for a global PSP. But in many cases, what we see is that businesses, they focus on a specific region, whether it's going to be Latam, MENA, Africa. So in these cases, it's always better to go local to address the local needs of every specific country. But that being said, it's time consuming, and it costs a lot of money to go and integrate every specific rail for the specific market. In many cases, you need to have the local licenses to do that. So in these cases, a lot of businesses, they go for a PSP that can cover the specific region, and that is export in the region where they want to operate, because on one side they can get access to the payment infrastructure, but then also they can get the local expertise of this PSP with their local teams, compliance, regulatory, legal. For instance, we've got teams sitting in pretty much all Latam markets that can advise on, that can test the payment, that can advise on some regulatory implications merchants might face. So yeah, ultimately it depends on the business strategy and how they want to execute the business.
So I will divide it into two, because there are big merchants, there are big clients, small clients, medium clients. There are such that are looking strategically. You can work with 30 different client providers in different regions, etc. That's fine, okay? It's a hustle, you need to maintain many relationships, etc. But that's fine, because sometimes it will save you maybe money, maybe it will serve you better because you will get to the right things that you want. That's one approach. But if you want to make things properly, in my opinion, you need to go to a global provider. And then also you need to think, okay, do I want to become local? Because local comes with a responsibility. I need to have an entity. I need to have people on the ground. I need to have maybe comply with the local regulation. I need to have the right compliance team, underwriting, AML over there. So that's thinking. On the upside, maybe I will save money. Maybe I will not bear the cost of FX, and I will get localized. So that's some discussion that clients are doing all the time, and we see that mostly the big ones are looking to become more and more localized, and they are thinking, okay, I will invest, I will open an entity in Singapore, and I will have a license over there, and I will open an entity, I don't know, in UAE, and I will have a license over there, and I will approach a provider or different providers that can give me this solution. So in my opinion, it's a matter of, let's say, how the business think and ready to invest, because going local means to invest in that, okay? It means to maintain that, it means to actually work in that. But in my opinion, most of, let's say, the big ones will go into more and more localization. We see it all the time.
Well, I believe that having a global support, even in the localization part, is very, very important, because I agree with Ron, it's very, very difficult to run the domestic individual localization infrastructures running smoothly. A lot of connections, a lot of hard work on that. From our end as Visa, we do provide the global network, and we have seen a lot of domestic setups relying upon our network as well, because nowadays with the technology evolving, with AI and all the rest in terms of technology, And of course, let's not forget security infrastructure.
Of course.
Security infrastructure is huge. So relying upon someone that provides full global visibility, has the accessibility in all the payment infrastructure is very, very, very important. So I believe that a mixture of the two is going to happen soon, and in some territories has already started happening.
Sorry, go ahead.
Yeah, no, just quickly touch on it. From an Equals perspective, we support the sector now for about 4 or 5 years, and we see ourselves as the glue, right? So the ability to onboard the global licenses and the entities that you have on a single platform, and we know that one of the pain points is to manage all of the underlying banking relationships, or the EMI relationships, the payment relationship. But where there's a use case to go local, if there are countries where it's hard to get the conversion rates for your underlying customers going, clearly you will build that relationship, but we will still bring it all together on a single platform for you to manage the global funds that you have and distribute it accordingly. I think from Equals perspective, we will get licensed in more countries, but not so much to just get access to the local payment schemes because it's expensive. It's to find the customers there. And the way for us to approach the globalization or localization of the account infrastructure is working with the likes of a Visa, Citibank, and other banks out there that have that infrastructure already. It's too expensive to replicate, it's too expensive to build. If you're able to leverage that infrastructure already, we can bring in all that service level to our underlying customers, unlock it, and grow with the clients and where they want to be in the future.
And this is the beauty of our industry as well, because as fintechs in general, we collaborate a lot.
We love it.
And a lot of the times, we're asked whether we're competing, in most cases, with banks or even with Visa. I heard recently as well, right?
Yeah.
I think ultimately we cannot live without one another. So all of that creates advantage for the end clients and for clients that we're servicing and our merchants, right? So they have the access, and someone maybe has the means, to deliver it, faster. But in general, when we think about globally, we have to understand that, and you all for sure know, money is expensive. Movement of money is super expensive, right? And I think what the clients are ultimately now looking at more, and I think this is the thought that should be in their minds, is how to make that more efficient and less painful and less as not so expensive as it is at the moment. And adding definitely local rails and establishing yourself in certain markets may give you that advantage in terms of saving the cost. But it's also a huge trouble to manage those funds, to manage the cash flows, to manage the currencies back and forth from those. So the bigger you are, I think the more I think you take that challenge upon yourself, because you see that the saving is huge, but it's still a very big burden for most of the companies, at least in my view. We have very little time, so I have to say I will ask one last question, and I give you a short time just to answer very quickly. So if we were to meet in 3 years' time on the same panel and talk about money, what would you think that changed in the last 3 years, and what would be the biggest change? Maybe 3 or 5 years, and do you think it's enough to make any significant changes?
I think in 3 to 5 years, we will be talking about how to optimize the efficiency around stablecoins and crypto acceptance, etc. I think it's a whole new layer that will be brought to our customers to move money globally effectively. I think that's a reasonable time period in which we do this. I think the second thing is we'll be talking about AI and machine learning and how internal processes have now been optimized, that bots are taking over in relation to underlying manual processes, creating more efficiency that we have.
Yeah, AI, I think definitely is going to be more and more relevant. I think also if we spoke about that there is not enough, I would say, providers that are now giving solutions which are real time, more and more will be coming and be provided real time. And I agree that stable coins and crypto will become more relevant, will be more compliant. So I guess there will be more diversity and more fun.
Basically nothing will change. We will just hopefully get the things that we are looking forward to in a nutshell.
Which will be a huge improvement. So.
For sure, yes.
Yeah, for sure. I think that we'll be talking about crypto again. It's going to grow in popularity, both on the C2B side as well as on the B2B. And of course, AI. Like we see the adoption of AI across all industries. I'm pretty sure we'll see it in the payments with, as I mentioned, like no-code integrations, AI chatbots that are providing real-time data about the payments. We briefly spoke about transparency. That's going to be a huge thing as well, for which AI most likely will benefit us a lot. Yeah, security as well, cyber security definitely. It's going to be a huge topic as well.
Okay. As a closing remark, I would like to say that definitely, of course, AI will prevail in the next few years. For sure, the next 3. Don't know about the next 5. From our end, we have invested a lot in AI, not just in security and infrastructures, but allow me to highlight that the next big thing is the intelligent commerce, where we are providing solutions through AI agents. So practically each and every one of us will be in practice having an AI agent being able to shop for my preferences, for your preferences.
I want to see how they will be able to handle payments. There's a lot of issues there with that.
They're handling that already. We have commenced our pilot staging in the US, and it's coming in Europe in late June.
That's very cool.
So more to be arrived in that direction. The next big thing, I believe, it will be security. Security in terms of digital identity, though, not the areas that we have.
That comes together with AI and agents, right? Because you cannot have not have that. But I have to say that, as interesting as it is, we have to close off because we respect also other panelists waiting to get on the stage. Thank you so much. It was really interesting, and I really hope it was worthwhile for the audience to be here as well. Thank you.